Hello, everybody. Welcome back to Cup of Joe. I am Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. So as we get ready to wrap up 2022, today I wanted to talk about a few different things. First, I wanted to offer some perspective on how the indexes have performed this year. Second, I wanted to let you know what Argent Bridge is doing for you as in these final few weeks of the year. And third, I just wanted to offer a couple thoughts as we look forward to 2023. So first, regarding indexes, those enjoyed another week of some modest recovery last week. Most indexes recovered about 1 to 1.5%. The MSCI Emerging Markets Index rose an impressive 3.5% last week. This was driven mostly by a rally in the Chinese market. With some favorable conditions, short-term conditions there, rallying that market. So bonds also recovered another 1.5% last week as the Fed signaled that it will start decreasing the size of interest rate hikes, which was a very welcome change. So where does this leave us in 2022 with about 18.5 trading days left? Well, the S&P 500 is at minus 13.3. Which is disappointing to see. And unless we see a really strong rally, which can only be made possible by a complete reversal of the Fed, unconditional withdrawal by Russia, and a total eradication of COVID from China, we're likely going to end this year in the red as far as US stocks. Now, while this is disappointing, this shouldn't be too far-fetched or even that surprising. Quick stat, since 1980, we've seen a negative year for the S&P 500, an average of about every 4 years or so. And if we go back to 2019, the previous 3 years have produced strong double-digit returns. So seeing this negative return, every so often should not surprise anyone. Now, over to bonds. The Bloomberg U.S. Aggregate Bond Index stands at minus 11.4 for the year. Now, this has been a truly historic year by a large margin. The double whammy of very high inflation and aggressive interest rate hikes in response to that inflation, well, those two things have just proven too strong for bond prices to fight against. But there are two elements of good news that I want to talk about. First, for people who hold actual bonds, which is a lot of our clients, these losses are strictly on paper. If you own the bonds and you hold those bonds to maturity, that loss or the price of that bond is going to tick back up to par value. So year by year, month by month, that loss is going to dissipate until you get a full return on your bond. And you're collecting interest the whole way. For the bond index and bond funds, much like stocks, those have some reflexivity to them. So the headwinds we've seen, which are namely inflation and interest rates, as those peak and start to reverse, you should see the recovery in those bond prices as well. Okay, enough about indexes. Now I want to mention just a few things that we here at Argent Bridge are doing for you as we wrap up 2022. Focus primarily on your portfolios. First, we've been looking for opportunities to harvest tax losses when they present themselves and where it makes sense, as all this volatility has rocked portfolios this year. And in the end of the year here, we're also looking at strategically selling a few mutual fund positions to sidestep some capital gains distributions that typically happen in December. As we've mentioned before, we're rebalancing the portfolios. We're actively looking at the allocations and making adjustments when we feel it's needed and opportunistic. We did that back in February and March, and then again, the end of October here. And the advisors are also focused on your portfolios looking for strategic opportunities such as Roth IRA conversions, which I know they've talked to many of you about. And finally, our service team is busy here making all the year-end gifting with the very generous client base we have. The service team is busy making all the charitable donations and gifts to family members and making sure those are all done by the end of the month. So now, focusing ahead to 2023. We're certainly in the thick of experiencing the headwinds for both the economy and the stock market. We are hopeful that 2023 is a year of change in this respect. So first, there's a reasonably good chance that next year it will be declared that the US is in or has been in a recession. But it's important for us all to remember that the stock market is not the economy and vice versa. And historically, the stock market has started recovering before the economy does. So you don't want to miss that time when the market turns around. So the lesson there, stay invested. Second, eventually the Fed is expected to reach a pausing level of interest rates in 2023. Now, when this happens, this should boost stocks and bonds. And ideally, this pause comes about because inflation has started to pause or decline itself, which we're kind of already seeing. And when that inflation starts to reverse, that should be a positive force for bond prices as well. And finally, hopefully, a lot of the issues we're seeing globally, primarily the war in Ukraine and all the shutdowns in China, hopefully we see a lot of progress on the way towards them resolving themselves. Obviously, these have a lot of big implications economically, but especially with the war in Ukraine, we hope that these work themselves out, mostly for just humanitarian issues. And I'm sure we all share that sentiment. So as we get closer to the end of 2022, we here at Argent Bridge just wanted to let everyone know what we are busy doing for you. And we are focused on setting 2023 up for everyone to have a successful next year and beyond. If you have any questions about what we're doing or need clarity on anything else, please reach out to us. Take care and hope everyone has happy holidays.